in the context of M&A, what are the opportunities for business valuation professionals? Number one, this volume, this size of 5 trillion and 5.67 trillion global size of M&A in India and outside and globally that I've spoken to you, all those numbers. Please remember, this volume of M&A is in addition to huge size of IPOs, which is $16 billion so far in 2020, in 2021, 22, the issues, IPOs in this country were to the tune of $16 billion in terms of dollars, the rupee converted in terms of dollar. So that is number one. So you can imagine, on one hand you have the M&A, on the other hand you also have the IPOs combined together. That runs into a huge size for the valuation. In 21-22, 2,200 crore fees paid to merchant bankers for the IPOs. And remember, merchant banker, of course, that would include merchant banking services, plus that would also include the valuation services. Excellent opportunities for adding value to the profession as well as to self. Huge scope for personal growth for registered valuers. But remember, size does matter. Private equity challenges. What are the challenges? The challenges are private equity, issuer company, merchant banker nexus can be fatal for the investor. And therefore, as a valuation professional, we have a moral responsibility to ensure that the valuations that we carry out are the most authentic and based on the most authentic techniques in the given situation. Even if we are working with a merchant banker and helping merchant banker in doing the valuation, even then we have the responsibility to ensure that the valuations that are done by the merchant banker are as accurate as possible. We owe a responsibility to every shareholder as a registered valuer. So it becomes our responsibility to ensure that the valuations that we do are most authentic, and they should be able to withstand the test of time. In certain cases, the valuations can go up and down. That's possible because if the war happens between Russia and Ukraine, and the supply chain is disturbed globally, and all the countries are trying to control supply of whatever commodity that they are supplying to the whole world, it is bound to result into inflation going high everywhere. And if inflation is going high, the valuations are bound to go down. But remember, those valuations are going down for a reason, and they're not going down because you did some valuation that was not right. So, and I'm sure all of you would know, in case of Paytm, the stock price was down by 30% on day one itself. On the second day, it further came down by about 15% or something like. So in 2-3 days time, the stock price was down by 45%. Now that's, and remember, at that time there was nothing wrong with the stock market. The war was not there. The war was not there. There was no inflation. There was no risk of inflation. There was no risk of impending recession as the people are talking about. That can happen, but when we do the valuation, our valuation should be able to withstand the test of time. Networking of the highest order is required. Continuous updation of knowledge by keeping abreast with the latest development and changes is must. And finally, need to focus on research and using data analysis. So friends, with this, I come to the end of whatever that I had to share on this topic. In case if you have any question, I would be very happy to take them. Over to all of you.